Welcome back, everyone. The proposed Securing a Strong Retirement Act, or Secure 2.0, has the capacity to impact everyone from student loan borrowers and startups to those nearing retirement. Well, for a deeper dive into what's in that plan, let's bring in Susan K. Neely, American Council of Life Insurers CEO and President. Susan, thank you for joining us. So what are some of the biggest changes in this proposal compared to existing retirement reforms?
Well, it's amazing with all going on in the world that this actually is moving forward with bipartisan support in Congress. It should pass the House tomorrow, and it's very exciting. It will do a lot of things, as you said, that will target special needs, people who have been particularly disadvantaged or behind with saving for retirement. So that is millennials who go into their jobs and need to be paying off student loans and can't take advantage of the employer match. This will let the employer match what they're paying off in student loan debts and put it in the retirement savings. It allows military spouses to vest faster before their spouse may have a change of post. It will help part-time workers by being able to vest faster and take advantage of retirement savings. It will increase tax credits to encourage more small businesses to offer retirement plans to their workers. And it also makes it easier to take advantage of annuities or that lifetime income, which can be really, really helpful in rounding out your retirement. So a lot going on in this bill that will be great for retirement savings. And it has momentum. Thank goodness.
It's something you don't often see, especially in these political times. So I want to break some of that down, especially when it comes to how people can sort of navigate their student loan repayments. How does that work in practice?
So in practice, very simple. You're a new employee who feels you need to use some of your disposable income to keep paying off that student loan. And that might preclude your ability to also take advantage of putting money into your 401k and getting the match from your employer. Well, what this will let you do is you pay off your student loan and your employer can still give you the match in your retirement account. So you don't have to delay saving for retirement. I mean, one of the problems we have now is a third of baby boomers have $0 to $25,000 in retirement savings, and they're probably going to live 20 years longer. So you got to start now, Gen Z, millennials, and saving, and this is one of the ways it will make it easier to do.
And what about for the lowest paid Americans? How do they start? What are some of the benefits that they get from this program?
Well, it goes to just having access to retirement savings. I mean, we have an employer-based system that works very well if your employer is offering you a retirement savings vehicle. So this allows more small businesses to provide retirement savings plans, and it allows part-time workers, which are some of the lowest paid, to take advantage of those plans. That came in Secure 1.0. Secure 2.0 will allow you to vest faster and take advantage of the retirement plan and putting money into it sooner. These also sound like technical things to people, but they really will matter, which is what's so great about this bill.
Now, I want to turn your attention to this recent Harris poll for Insurer Nationwide that showed that nearly 75% of women said that COVID-19 had a negative impact on how long they could live off their retirement savings. Now, keeping in mind that women already enter retirement with less because of the wage gap, how might Secure 2.0 help close that gap?
Well, one of the things it allows you to do is to hold on to your retirement savings longer. A lot of people are deciding they need to work longer, and you won't have to tap into your required minimum distribution this will push it off to a later age. It allows you a bigger catch-up opportunity to pay in longer. So those are some of the ways that can help women. I mean, it's a very, very deeply concerning statistic because, as you said, already women were on average $300,000 in the hole for retirement savings because of caregiving, because of pay equity gap. And now we have COVID and the pandemic impact on women in the she-cession. So Secure 2.0 will help with some of that.
And as you mentioned, things like COVID, you also have inflation, people sort of wondering how to sort of manage their budgets at the moment. How is that affecting the overall pace of retirement savings that we've seen so far? And how might Secure 2.0 change that?
Well, Secure 2.0 is fundamentally designed to make it easier for people to save, removing barriers. You have more access through your employer, or you can invest more quickly, or you can start participating in the plan more quickly. these kind of things should remove concerns people have about access and a meaningful way to save. Certainly with inflation and other pressures on the family budget, we don't want to make it harder. We want to make it easier for you to pay yourself first and start preparing for retirement as soon as you possibly can.